Even though things got ugly again today, I still think it's worthwhile to sift through the rubble of stocks that have been laid to waste during the huge market-wide sell-off over the past few months. That's why tonight I want to introduce you to Covanta, CVA, for all you home gamers. One of our guests actually called on this one. It's a waste disposal company with a renewable energy kicker, as they can turn roughly 20 million tons of garbage into enough energy to power 1 million homes. Plus, the company also has a significant metal recycling business. Now, Covanta's stock has been pummeled of late. It's down 42% from its highs last May. So the company has suffered through some major issues. Downturn in commodity prices, not up to them, right? It's really hurt their metal recycling operation. However, the company reported a better than feared quarter last week, Covanta beating Wall Street's revenue expectations, even as it delivered 11-cent earnings miss off a 14-cent basis. Although much of that miss came from a $93 million charge related to an IRS audit settlement. Plus, the company's been buying back stock, picking up $32 million worth in the last quarter, another $18 million in January. And just last week, CEO Stephen Jones stepped in and bought 15,000 shares in the open market. I think that's a sign of confidence. Covanta's been pounded to the point where it now supports a 7.5% yield. We have to wonder if the dividend is safe and got to ask about it. Let's take a closer look with Stephen Jones. He's the CEO and CEO of Covanta Holdings. Find out more of this about this stock and where it is headed and why he's buying. Mr. Jones, welcome to Mad Money.
Thanks for having me.
All right. Now, first, I want to get right to the point here. We see a stock that's down a lot. We see in your conference call, the first thing you do is you talk about the dividend. It's going to be safe. Then you buy stock. So then what makes me think is, why should we think that the market is so wrong about Covanta, that it is such a good opportunity?
So I think right now the market misunderstands our stock a little bit. We're trading much like an energy company, but if you look at the revenue streams of the company, 2/3 of the revenues come from the waste side. You mentioned we process 20 million tons per year of waste. That's 2/3 of our revenues and is a big part of our business. About 25% of our revenues come from the power that we produce. And like I said, I think we're trading more like a power company now than a waste company. And then there's a small portion, $50 to $75 million of revenues that are related to our metals recycling business. So my view was it was a good buy and it was an opportunity for me to get further into the stock.
Now, you say at the beginning, you talk right up and you say, look, you know, I want to briefly discuss points on capital allocation. December, we announced we would be maintaining our current dollar dividend. And you actually talked about maybe boosting it. Sure. But then at the same time, your CFO said that waste and service revenue increased by $13 million, but energy service declined by $25 million. Recycled metal revenue declined by $35 million. Those are big numbers. Why chance the dividend? Why not husband the cash?
Well, the dividend really was set by us a year or so ago. It's about $1 per share. We set it to be sustainable across the entire cycle. And so I think most people would agree right now, from a commodity standpoint, we're at the low end of the cycle. As those commodity prices come back, we'll get more EBITDA. But at this point, you know, we look at the dividend as solid, and we think that the underlying waste revenues that we have underpin that dividend quite nicely.
Okay, on the recycling side, explain to me how it works, because David Steiner was on recently. He did a terrific job, waste management, and they've been raising the dividend. He just said, look, the recycling business is too hard, and he's really had to pull out of some contracts because people don't recycle well. Right. I live in Summit, New Jersey. I put my recycling out. No one tickets me if I don't do it right. By the way. And I understand, because you're in my neighborhood, that you would be taking my waste. What do you do with it, and how do you make money with it?
So the waste comes to the curb. In fact, Jim, we did a little research. Your waste goes to our Union facility, which processes about 500,000 tons per year of waste. That waste goes to recycling. You recycle it, so the recycling bin goes to the recycling folks, like potentially waste management, if they're doing your recycling. The other bin goes to our energy from waste facility. We process 20 million tons per year across all of our 45 facilities around the world. And that produces enough power for 1 million homes, as you pointed out. On the back part of the plant, we recycle the metal. So we reclaim about 500,000 tons a year of metal. That's enough metal, if you think about it, it's enough metal for 5 Golden Gate bridges. We also take out enough aluminum. We take out about 1 billion aluminum cans per year. So that's the part of the recycling industry that we're in, the metals recycling chain. And those prices are under pressure now because of some of the slowdown in China.
But you did say that their Turkish buyers are back. I know they used to buy copper very aggressively at the waste management landfill. So some of those buyers are back. And aluminum, I know, has come down a lot, but maybe it's bottomed in price.
Yeah, so, you know, it's hard to tell where the bottom is. I would think that we're banging around the bottom right now. At least our view is that we don't control the price of the metal. We're a price taker. But what I tell the employees is, let's control what we can, which is the quantity of metal that we take out of the tons that we process, and also the quality. So on the quality side, we've been putting in place a cleanup system in Fairless Hills, Pennsylvania. It takes the metals from 9 of our facilities and cleans that up so we have a better quality metal to then sell to the scrap metal market.
All right, but Steve, what I hear from you, tell me if I'm right, is that I really shouldn't focus as much on that back end, even though this commodity
That's
price
correct.
that it's really the front end, and it's those stable contracts, which gives you the conviction to be able to have that cash flow, to do the buyback.
That's correct.
And okay, because that's what I think people are looking at it the other way. I think they're really saying, that waste kicker's not happening.
Yeah, so if you look at our waste, so 20 million tons a year of waste being processed, 85% of that waste is under long-term contracts. So it'll take about a 10-year term, and they're with municipalities. So the credit for the obligor on the other side of the contract is quite good. So again, we feel good about that part of our business.
And that's scaling. You can get more.
It's scaling quite nicely. If you look at special waste, or we call profile waste, this is an area in the U.S. where government support is not really that strong for energy from waste, but companies, because they want to meet their sustainability goals, are giving us more profiled or special
That's
waste.
a very good point. Even though energy comes down, people want to be sustainable. That's just the ethos of the country now.
That's correct.
All right, that's Stephen Jones, President and CEO of Covanta Holding Corporation. You asked about it. It's a pretty interesting company, and it's where my waste goes. Thank you very much, sir.
Thanks.
Nice to
Appreciate it.
Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.